Hello and welcome to Wealth and Wisdom with the Market Guys. I'm James DeGiorgia.
And I'm Jeff Garbaz. On today's show, we're going to discuss investing in emerging markets. Joining us today is Stacia Hachem. She's founder of Research Agency, providing emerging markets consultancy to institutional investment managers with Eastern European, Middle Eastern, and African trading recommendations. Welcome to the show, Stacia.
Hi, Jeff.
Great to have you. Today we're going to be talking about investing in emerging markets. So why don't we start off with the most basic concept and tell us what emerging markets are.
Emerging markets are markets outside of what are called the developed nations, which is the United States, Japan, and most of Western Europe.
Great.
Emerging markets is everything outside of that, although some Asian investors might quibble with that label. The reason why we want to be looking at emerging markets is because of their dramatically higher growth than that in the developed nations. Higher growth means higher earnings.
And investors typically are divided between being either growth investors or value investors. And from your experience, probably more people are growth investors than value investors, correct?
Yes, you could argue that emerging market investors are primarily focused on growth. However, the emerging markets have become more sophisticated, particularly in the last several years. So you might have value investors like oil and gas, long-term investors investing in Russian oil, or long-term gold investors investing in South African stocks as a long-term value-oriented play because of the cheapness of those assets.
I guess the question that comes to mind is which of these emerging markets represents the best areas for investment for investors here in the United States? Well,
I focus on Eastern Europe, Middle East, and Africa. So I can't really speak to Asia or Latin America. In my three continents, which are encompassing a broad spectrum of both growth and debt levels, the countries that I most prefer are those with high growth who are accumulating huge foreign exchange surpluses, such as Russia and the Middle East.
Now, when we look at companies that are trading in these markets, is it as simple as in the U.S. we just look at how the stocks are performing, their financials, or do we need to look at other issues such as political risk?
In my opinion, political risk is key to investing in, particularly in Eastern Europe, Middle East, and Africa. And without it, you could be making a lot of very, very destructive, value-destructive mistakes if you solely looked at price over earnings or other purely financial indicators.
So how do you measure political risk? What do you do to measure the political risk?
Well, that's a very good question, Jeff, and one which I consider to be completely subjective. The way I measure political risk is by looking at the country's self-interest and what matters the most to that particular country. So, for example, in Russia, Russia is considered politically risky by most U.S. investors. I disagree with that, as do many European investors, and consider Russia to be acting in its self-interest by deepening its financial market system and being committed to improving corporate governance. Now, the bar starts very low, but that doesn't mean they're not working towards the same goal.
I mean, the big rap on Russia is the fear that, we hear these stories about businesses that set up in Russia and then all of a sudden are dispossessed by the whims of a bureaucrat, or supply chain being interrupted by, not being knowledgeable about how things work behind the scenes in Russia. Is it your observance that that's becoming smoother and less of an issue?
I think in any emerging market, having good relationships with the government is absolutely critical, and without it, I think any foreign-owned company is probably not going to get very far. Now, in Russia in particular, Russia has strategic assets, and those strategic assets have been announced. All investors and the public are very well aware of what the government considers to be a strategic asset, and so the way I try and curb political risk within my model portfolio and the recommendations I make to my clients is by, for example, never recommending predominantly foreign-owned companies operating in strategic asset sectors.
Right. Okay. So,
for example,
so an oil company that's a foreign-owned company would be less desirable than a Russian-owned or a largely Russian-owned company.
Dramatically less desirable. Or if you should take a position in a company like that, I would only recommend it that if you were watching it all the time and you were keeping abreast of every news event, every critical juncture of that company. And the way I recommend investing for emerging markets is much more top-down. So I tend to stay away from those kinds of stocks.
Well, one of the things that if I may, because I'd like to pick up on that, is you have a portfolio of stocks that you've recommended that are Russian, in your portfolio now. Of those stocks, maybe you could give us one or two examples of things that kind of fit your approach, and why they fit your approach in Russia.
Well, let's say, for example, one stock that's particularly controversial that comes in and out of my portfolio is Rosneft.
And where's that traded, and what's the symbol?
Rosneft is it's ROSNLI, traded in both London and Moscow. Rosneft is a Russian oil company that was the beneficiary of the breakup of the Yukos. So when Yukos's assets, and Yukos was formerly the largest private oil company in Russia.
That's the owner was thrown into jail.
The owner is still in jail.
Okay.
The founder and CEO, Mikhail Khodorkovsky, is still in jail in Siberia with his ailing and very sickly CFO. The company was broken up, and Rosneft is one of the beneficiaries of the breakup of Yukos. It bought its assets at auction, and so now Rosneft has basically acquired the status of the largest private-owned oil company in Russia. Now, Rosneft has always been very expensive on a PE basis, but because of the oil taxation changes that are coming right now, in fact, yesterday, Putin, the new prime minister, just announced that he wants to see less taxation in Russian oil by August. So I don't know what's happening in the market right now, but I can imagine that Rosneft has closed up.
It's a big positive for that company.
Yes, Rosneft has closed up dramatically, as with the other Russian oils. But Rosneft comes in and out of my trajectory because Rosneft is a highly favored Russian oil company with, in my opinion, the least political risk attached to it of the Russian oils, not the gases, but the oils, and it actually has relatively transparent corporate governance and a CFO who is an American, and it tries to adhere as best he can to very, very strict corporate governance standards. And were it not for the fact that it was so expensive, it would be in my long-term picks permanently.